What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is we have to go over what is going on with Ortex at the current time. We aren't receiving any of the lending data today. Now, we do have a comment about this from Ortex, but some of these things aren't making a whole lot of sense. Now, in addition, we are going to be taking a brief look at the option chain because, as expected, the open interest on this monthly options expiration date, which is going to be expiring on Friday, is slowly starting to climb up. Now, the fact that the option chain for this week is condensed leads the way to some more volatile price movements. Now, we also have to talk about what is going on with Robinhood at the current time. They are struggling. They have some institutional insiders that are going to be liquidating a significant portion of their position, and there are fears surrounding cryptocurrency regulation and a potential payment for order flow ban. Now, AMC over this past weekend really hit it big with a $300 million victory. Now, we're going to go over exactly what that is. And in addition, we also have JP Morgan basically telling their top clients to short the overall market while telling their other clients to basically keep going long. This kind of goes to show just how weird our market is at the current time. If you have more money invested and you have access to more information, you are most likely going to succeed. That is why retail investors typically have such a hard time in the market, but that is going to change with all of the things that the apes have been able to push forward and expose. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button. So at the current time that I'm recording, AMC is trading at $37.83, up about 1.7% on the day. Very solid start to the week so far, but the price can always change by the close of the trading day today. Now, when we come over to Ortex right here, this is what we're looking at. So we have utilization 86.59, but over here in today's changes, we have NA. Nothing has really changed, and we are still seeing the estimated short interest at 20.49%. So this has happened with a lot of other stocks too. And when we come over to this Ortex tweet right here, due to the Columbus Day holiday, some parts of the markets, for example, the bond market, are closed today. We have checked with our partners and everything is working as normal. However, lending volume is significantly lower than normal. Thus, a number of stocks don't have live updates. So this is a very weird thing that is happening today. We are seeing the bond market closed, but some of the lending data isn't coming in. We're not seeing the lending volume as high as it usually is. Well, the markets are open, trading is happening. Why aren't they continually lending out shares? There's definitely something going on behind the scenes here that we are not privy to at the current time. But if you check a bunch of other stocks, even Apple on Ortex, they are not actually updating the lending volume on their side either. So it is happening with a lot of stocks, not just the short squeeze stocks that we like to talk about. Now, when we come over to Stonko Tracker, what we can see here is that the out-of-the-money options are slowly starting to tick up. So we have about 206,000 contracts out of the money with 16,428 in the money. Now, again, be very, very careful if you are going to be gambling on weekly options. Most of the time, these options expire worthless, and the market makers, like we have talked about before, usually try to pin the stock around that max pain price where the most amount of contracts expire out of the money, hurting mostly retail investors and profiting the market makers the most amount of money. But the fact that we know as we come over here that when we take a look at the option chain going into this week, that the strikes only go out to $95. The fact that we are still seeing a very high amount of open interest on a smaller option chain, these contracts are going to be much more condensed and could lead to more volatility. Now, let's get into this Robinhood situation because everybody is really looking to see Robinhood crash and burn. So Robinhood insiders speed up stock sales days after new risk disclosures related to crypto crypto and payment for order flow. Robinhood fell about 2% after hours on Friday after the company announced it was planning to speed up a previously announced stock sale. 9 Yards Capital, this individual, and New Enterprise Associates are among the selling shareholders who may get an opportunity to offload their shares as early as Wednesday, according to Bloomberg, citing a company filing. Bloomberg explained the company filed a second amendment to a September 1st filing for the potential resale of shares by holders and an acceleration request asking the SEC to declare the filing effective on 4:30 p.m. Eastern Time on October 13th. At the same time, Robinhood also disclosed in a new filing Thursday night that regulatory intervention in cryptocurrency trading and a payment arrangement between brokerage and trading firms were additional risks the company faced in its business. So if you guys don't know, the vast majority of Robinhood's revenue at the current time comes from payment for order flow. So if that goes away, Robinhood is going to be in deep, deep trouble. And if some sort of cryptocurrency regulation does end up coming in, and we do see that hurting brokerages like Robinhood, that is also going to hurt them as well. So at the current time, Robinhood does not look like they are doing well as a company, and especially with what happened back in January, good. Now, moving on to this big win that AMC has just basically had. When we come over here, box office, No Time to Die opens soft domestically, but tops $300 million worldwide. This is a very, very good sign. So when they say it opens soft domestically, what No Time to Die really came in at was $56 million versus the projected $60 million. That's not that big of a difference. And what you have to think about is that in addition to coming out, No Time to Die was also competing against a lot of different movies. We have a lot of different movies, such as the second Venom movie, that are still really doing well in theaters. So the fact that James Bond still did very well, not only domestically, but worldwide, and we still have all of these other movies doing really well, shows us that, one, people are going back to the movies, and the short thesis against AMC right now at the current time does not make any sense. Previously, it might have. AMC was struggling as a company, but over the last 9 months, they have done so many great things to boost the value fundamentally of the company, which can also lead to more institutional investors seeing that AMC has a lot of potential going into the future, especially with all of the different aspects of the theatrical experience that they are adding, such as showing a lot of those fights and a potential GameStop partnership coming in the near future. Now, when we come over to this article right here, we've been talking about on this channel a lot of the different types of things in the global economy that are really affecting the market, and not only just the market, how they affect AMC. So what we can see here is JP Morgan Prime, meaning their prime brokerage operations, advises institutions to keep shorting even as the bank hikes its S&P 500 price target. So this is a very interesting thing. We've seen some types of these types of statements come out in the past where sometimes either a Morgan Stanley executive or a JP Morgan executive will come out and issue a price target rating on one of these big indexes, but also say that they are still very bearish. Now, why might they be bearish? Well, we did just see the can kicked down the road with the debt ceiling situation. Most likely that is going to get fully approved, kicked down the road to December. But again, it basically just creates the same problem that we have had over the last 2 weeks coming up at the end of November and the beginning of December. So they are going to have to figure out this situation again. In addition to this, we also have the Evergrande situation, and that is not looking so good at the current time. They are not repaying their debt. We also have another real estate property giant in China, Fantasia, also having issues. And if you guys have watched any of my previous videos, that whole situation going on in China right now is really just a symptom of a larger problem due to the incentives that the Chinese government have given all of these development firms. It has incentivized the overdevelopment of a lot of these areas, and the debt that they have taken out, they are not able to repay. Now, bringing this conversation back to AMC. So what we've seen out of AMC over the last couple of weeks, I know a lot of people have been really excited for this next big price movement to the upside. Now, a lot of people I've heard are getting a little bit tired. They're getting a little bit fatigued. Now, I want you guys to remember and really think about this concept right here. When in doubt, zoom out. When we go to the year-to-date chart on AMC, we were as low as $2 a share all the way back in January. We are now consolidating in this upper $30 range. Now, I know a lot of people have entered at these higher levels and come back down, but what you also have to remember is that what we've seen out of this stock is that any moment it can start that next big move up to the upside. So what it really comes down to is, are you patient enough to let this play do its thing? Or are you going to decide, maybe this isn't for me? Now, for me personally, I am perfectly fine with holding this stock for as long as it takes, but that is just me, and nothing I say in these videos is financial advice. These are for educational and entertainment purposes only. I see the potential in this. These shorts have not covered their position, and we and a lot of other people are in this play for the short squeeze aspect. So if those criteria are not met, I am not even thinking about getting out of this trade anytime soon until we see the significant signs that the shorts have covered their position. So that is going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.